Ladies and gentlemen, President Biden takes the throne. Immediately, he rejoins the Paris Accord. What does that mean for you? As a trader, hint, you're still going to be able to smell your little brother or sister's diaper. With that being said, what can you do to better yourself as a trader this year? Guess what? Some of the answers I give you might surprise you. We're going to go through that. Not only that, we're going to see how other traders do. We're going to look through their successes and problems, real traders, real emails, unfiltered, unfettered, right here on the Newsbeat show. Before continuing with the show, kindly read everything here. Pause this slide, read it in its entirety, then hit play. I don't give stock picks or investment advice and tons of other things that you could read here. Thank you so much for reading that. Okay, so I just want to talk about things, of trying to constantly grow traders to the next level is the true job of a guru. I think that sort of got lost over the years because unfortunately, what most gurus do are really irreplicable by the vast majority of the population. Yes, you'll have a handful of people who could do exactly what that guru does, hold positions, hold a dozen positions. I'll tell you what, I've been trading 22 years as of this year. I'm on my 22nd year in June. I'm going to be trading for 22 years. Can you believe that, guys? In June of this year, I'll be 22 years as a trader. I'll tell you to this day, I am not very comfortable with one or two or more positions. In all fairness, I am a lot more comfortable with one position. So when you have a trading service, you have to be able to help the people around you. Otherwise, they wasted their money, right? You have to fight for the people around you. Otherwise, you wasted your money. So that is the ongoing fight. So what I'm going to try to do today is I'm going to go into the live emails here momentarily. I know you guys are probably excited about it. I'm going to go a little into the future, the politics um, of the Paris Accord, and show which stocks can actually be positively impacted by that. And yeah, and then what I'm going to do is not only ask Mark, where you guys get to ask Mark. Mark is going to ask you and tell you a little about my life and how I actually grew, things that I took for granted. And what you're going to realize is for a lot of you, these little tidbits of information are going to resonate with a lot of you, some more than others. So allow me just to go ahead and begin. When I was growing up, I never respected going to bed early. I would stay up till, you know, 2, 3, 4 in the morning sometimes playing a video game. I'm Eastern Standard, and then try to wake up at like 9:15, go ahead, use the bathroom super fast, fly to my computer with a cup of coffee and be there as the bell is ringing. I would feel groggy, I'd feel cloudy, I'd feel unprepared. And I was an adult enough, I had no boss. There was nobody sitting over me saying, "Hey, Mark, you should really go to bed early." It almost would sound like your parents would tell you while you're growing up if you stayed up too late. That was one of the biggest underestimations of my life, the importance of actually going to bed early and not, in my case, playing a video game or anything else that you might, think of doing. So since then, since all that has happened over the years, I've realized that getting a good and restful sleep is imperative to your success the next day. What I have realized with traders, and again, I am coming from a point where we all know that 98% of traders fail. We all know 98% of traders fail. However, when I go to the Newsbeat live room and I go ahead and I ask this question, my favorite thing to share with you guys, 75% of people said they're finding tremendous P&L consistency with my place. Yes, in an industry where 98% of people fail. The reason why I'm showing you that is to just try to show you the angle in which I'm trying to achieve with you and the level of where I'm trying to get you. And I want to do it for you for free. I really, want people to be successful traders. It is a passion of mine. Nothing makes me happier than to actually see somebody saying they're having their best day or they're finally turning consistent. Nothing makes me happier than that. So while I was growing up as a trader, I used to make these extremely gross exaggerations. And what I realized is you really do have a decision. Most people who are failing at trading, when I say most, 99% plus, in my experience, in my opinion, most traders fail from the small decisions that they make during a normal day. Okay? I can play one more video game. I could watch one more TV show. I could stay up a little longer. I could do this. You see a food that, how many people out there these days, there's so many people who are gluten allergic these days. And how many, and I'll prove it to you, and you might be it, and you might not even know it. Like, how many of you guys eat bread after you eat something with bread in it, or wheat, or flour? You feel like a truck ran over you, and you feel like there's a boulder in your stomach, and you're just like sitting there, like half conscious. People like you who do that really need to cut the bread out. And I know, but Mark, I love bread. All right, look, your success hinges on the micro decisions that you make every day. And what you'll realize is you'll almost always have a choice. You'll always have a choice to usually say yes or no. There's somebody with a gun holding it up to you, holding it up to your head. Fine, you don't have a decision. But the majority of people, you do have a decision. And it's these little decisions which will make you a better trader. You don't even realize it. A lot of people have all the tools already and more to already to be a successful trader. It's just the little micro decisions that you're actually pulling through in your life is completely the reason why you're inconsistent, why you're toxic, why you're in a bad mood. You don't even realize it. So everything from trying to keep your environment as happy as possible. If you're living with someone, it's a bit more difficult, because now you don't have to just worry about yourself, you have to worry about other people as well. To the micro decisions you make, from eating healthier to going to sleep to not being lazy. Like, let me give you an example. How many people, when you wake up in the morning, you like to roll around in bed for like 15, 20, 30 minutes in the morning? Like, how many people actually do that? Where you're literally in bed, you're awake, you are awake, but I'm just gonna stretch it out a little, just close my eyes. Maybe I could catch up on just a few more Z's, and then I'll wake up and I'll be, all jolly and fine. And or yeah, they literally created the snooze button for this problem, right? Like your alarm clock's like beep beep beep, and you're like, click, the most graceful click ever. And now nobody's gonna bother you. There's gonna be nothing screaming at you to get up for 10 minutes. What a lovely button. The problem is, in life, you can't always hit the snooze button. Can't always hit the snooze button in life. You can't go through life saying, I'm just going to eat crap today, but next week I'm not even talking about dieting, by the way, just so we're clear. It's not even about dieting. It's just about eating stuff that will throw you off. Consuming alcohol before trading, tobacco, or inhaling marijuana products through, those little vape pens, or those little marijuana oil pens, or actually smoking a cigarette, or actually smoking marijuana. I mean, these things are actually harming you. You might say, Mark, all right, fine. I really know that it's harmful for me. I really know that I shouldn't do it. But let me ask you a question. Let me ask you a question here. When you actually think, I shouldn't do it. How does a cigarette affect my trading? I know it's unhealthy for my lungs. I get that. I know it's unhealthy. Like, why is smoking a cigarette bad? Or, wearing, for example, even If you're trying to quit a nicotine patch, why is that bad for your trading? Why is it harmful to put foreign substances inside your body? Well, what you don't know is when you actually smoke a cigarette, what happens is you're actually disrupting the neurological connections within your brain. Those poisons in the cigarette, all the carcinogens, and I'll not even go fully into that, but they actually store in your brains. They're actually microparticles, and it's actually worse when you actually smoke one of those e-cigarettes. They're microparticles, and when the particles are so small, they actually go inside the intracellular level, and your body has a harder time disposing of it. Your body will have a harder time disposing of something like that. So, so before you smoke, understand that your decisions in trading throughout the day, the literal electrical connections with your neurons sparking off and firing with each other are actually going to be more conducive for you to do stupid decisions. Science proves it again and again. However, you really want that cigarette. And I understand coming from somebody who is an ex-smoker, I understand these mistakes. The stuff in which I'm speaking to you about is mistakes I've made, things I've learned why they were mistakes, and then moving on. For me personally, I had to understand exactly why it was bad to be a smoker while trading. I knew it was unhealthy for my lungs. Don't get me wrong. Like, I got that. I got that. Do you also know that smoking produces a negative psychology? Do you know a study done showed that every single person who smoked cigarettes with almost 100% effectiveness came came to sort of a humble acceptance that they were killing themselves and that they were going to die earlier. Did you know that? What do you think that does for your psychology during trading when you're admitting to yourself that you could die earlier and you're killing yourself? Like when people smoke cigarettes, they don't stop and say, "Oh, what? I thought this I thought this crap was like a celery stick. Oh, what is this?" Everybody knows they are killing themselves when you smoke a cigarette, yet they do it anyway. And the problem with that psychology is when you actually start doing trades and negative trades and everything just to hurry up and get it over with, you're actually accepting and being okay with the fact that you're going to lose money and you're going to do toxic trades on a subconscious level. Did you know that? So I'm just going to try to drop those little tidbits on you every so often to just try to at least help you understand. For me, the biggest benefit was actually, we're going to go into the Ask Mark now, was actually understanding the reasoning sometimes on the scientific level and very importantly on the psychological level for why certain things are harming you. And if you ask any trader, the majority of them will say the vast majority of trading is psychological, right? Yet, that is one of the most unsearched, unfounded fields in trading. People just generalize. People don't go through most people's everyday life. Most psychology books in trading aren't that useful, and a lot of them are old, and same with the training courses, etc. All right, let's go into let's go into some traders who are going through good times, hard times, bad times, maybe all of one, maybe all of the other. Hey, Mark, I've been doing so well and I've been so consistent and profits to show. The last couple of Wednesdays, interesting, have been horrible, and I went into today concerned about it. All right, so immediately, just before I continue your email, you were already aware enough that you don't do well on a Wednesday. So the last two Wednesdays were horrible for you, and you're walking into the market scared, unsure of what's happening on this Wednesday. By going into the market right at that point, and I don't even know what your email is going to say yet, but I will read it and continue on it. What happens is if you know, for example, your last couple Thursdays are bad, and you're going into tomorrow saying, I need to trade on a Thursday, and I'm going to be going into tomorrow on a Thursday, that's going to probably end up hurting you because you're almost saying, well, if I know Thursdays hurt me, why am I here? Well, I can't always have bad Thursdays. I can't give up on Thursdays forever. And then what happens in the end is you start going into this psychological battle with yourself based on the day of the week. I psyched myself out. Then when Tesla didn't do anything with a 2 out of 10, 2 out of 10 referring, if you're watching here, to the conviction level on it. Usually most things are lower than 2. They're all 1 out of 10 unless otherwise noted. So 2 out of 10 is much higher than a normal conviction in our service here. Just to let you guys know what a 2 out of 10 is. Then when Tesla didn't do anything with a 2 out of 10 and I lost on a couple Amazon trades, I got toxic trying to find anything. I was down up to $24,000 today, then closed down 19,000. I gave back all gains in January and part of December. It was horrible. I broke every rule trying to get it back, over trading, chasing, even questioned my internet as it seemed to lag. The only thing that helped me was I stopped and said I was going to do the trades you called, and that calmed me down. It's disappointing as I had such a string of great days, discipline, consistency, and great profits. Gave back 30% of my account in one day. I need guidance and direction of where to go from here. I feel I just need to start over and work back to good trades and consistency tomorrow. Thank you for any help and words you can get me going in the right direction again. Okay, so I could approach it more vague because I can't actually see the trades that you're doing. You actually didn't share the trades, and I think you're already aware of that based on what I was, obviously saying before. One of the things, well, that's one of, I think, the most important things, as you know, as somebody who runs a trading service like this, a guru, if you will. That's one of the, I think, the most important things that people come to ask me. How do I get back on track again? I've been doing great. I've been doing great. I've been doing great. And then just bam, just a big down day for my account, blew up, tilted, everything. How do you approach that? Well, number one, what I actually want to do is I want to know what happens in your life. You ready for this? On Tuesday. I want to know what happens to your life on Tuesday or Wednesday morning before you trade. Is there anything that you're supposed to do on Wednesday after trading? So what I basically want to do is I want to take Wednesday, 9:30 in the morning. This is what I want to do here. So let's say right here, we're just doing a bit of a timeline here. And we'll talk about Tesla and President Biden joining the Paris Accord and what that could mean for electric vehicle stocks. But right now, let's just pretend this is a magical timeline, and right here is 9:30 a.m. on Wednesday. So Wednesdays have been bad for him. We're talking Eastern Standard Time, just so we're clear. So I believe he is West Coast, so that would be 6:30 a.m. for you, obviously. So we're talking about 9:30 a.m. Eastern Standard Time. Okay. What I want to know is what happens over here, which to me will be literally Tuesday when you wake up. Well, I want to know what happens Tuesday when you wake up to Wednesday when you go to sleep. See what I did there? I want to know what is on your plate. Now, here are some things that could be causing an emotional charge with you. Was Tuesday when you wake up generally a day because this gentleman used to own Baskin Robbins? Was this a day where you're supposed to do something for another business? Was this a day where you would have to go to the bank maybe to pay bills or withdraw money? Or is this a day where you have to help someone or do something? This is what I want to know, and maybe the answer to this is no, but I want to know. That's one way I would approach it because it's honestly rarely do I see people with most people have issues on Friday or Monday, in my experience. Friday or Monday tends to be the hardest day for traders. For traders, that tends to be the most common thing. So the fact that you're actually saying Wednesdays is fine, but I'm just trying to understand, is there anything different that happens before that Wednesday where you trade or after at the end of the day, something you have to look forward to doing? And I want you to actually see if that is actually causing you some psychological toxicity. Again, just working with, look, I get it, working with whatever you shared with me here in the email. I've been doing well and so consistent and profits to show. You lost on a couple Amazon trades. So I'm actually curious because Amazon was a lot of our best names today. So I would like to know which Amazon trades you actually lost on. I lost on some Amazon trades here today too, but I have a ton of money to show for it. Like so for example, the first really good Amazon trade I saw was this Mark 1 right over here. This was the big Amazon trade right here. 1 minute. I I crushed Amazon within 60 seconds right here of this Mark 1 strategy. The stock, I didn't hold it for this long, but the stock ran up $12, almost $13, excuse me, almost $12, like $11, 84 cents. Let's call it $12 in 60 seconds. And it was predictable using one of my methodologies right over here. This Amazon trade crushed it. Okay. Here's an Amazon trade where I'm not sure if I made money or lost money. I think this is when I made money. Had I held it a little longer here on a legitimate no you limit 8 setup right here, I would have lost money. So this is one where you could have lost money. Here's a know your limit 21. This one I crushed and made money. By crushed, I mean I made money. Crush is um, a very interesting term. I had a low end 5-figure day today. The first number in my P&L was not the number one. Let's put it that way. And it was thanks to these little scalps in Amazon. Now, one of the things that I did well in Amazon today, and again, I have no idea where you're coming from because you're not sharing with me. I mean, I'm sure in the future you will, my brother, but you didn't share with me what you did. So, how I did well in Amazon today, because I could relate with this stock today, I was taking very quick profits. I was trying to utilize the triggers intelligently, and I was front running very effectively. And when I front ran, if the stock went against me off of a front run, I would take a very quick loss. Usually that loss wouldn't be more than I'm guessing, yeah, I don't have all my results. I did many Amazon trades today. I'm guessing my loss wouldn't have been more than like 30 to 60 cents a contract on average, maybe. Meaning if I took 10 contracts, I would lose 300 to just making up a number. If I took 10 contracts, I'd lose 300 to 600 bucks on a front run. However, in a situation like this, where like the stock explodes, if I took 10 contracts, I can make 3, 4, 5, 6 grand, for example, on something like that, really exacerbating the definitions of risk reward. And in a situation like this, maybe I would make 1,000 or two, or 800 or 1,200, something like that. Again, just completely making it up. I don't have my results in front of me, but I'm sort of just trying to share with you the mentality of what I did well in Amazon today. And all right. So he's saying I was holding, hoping it would go back up and should have held longer. Wait, so you're hoping it would go back up? I mean, I don't really understand. You said you were holding, hoping it would go back up, but you're saying your mistake is you should have held longer. But that's the problem with Amazon. Amazon isn't like an Intel, and I'm completely making this up, where if Intel drops from, if you're buying Intel here and it drops down like 25 cents in your face and then goes back up, you could have held Intel longer and make a lot more. The problem is in Amazon, it doesn't look like much, but even like a little drop like this here is 12 points. So if you have like even like one option contract and that thing drops like 12 points, I mean, you're going to lose 400 or 500 bucks a contract. You have 10 contracts, you're going to drop 4 or 5 grand before, and even then more, maybe even 10 grand down here before you potentially make that money back. So it becomes very difficult with an individual name like Amazon. I would actually classify Tesla there as well. With these very quick moving names, it's pretty much, not to stem up more, that's what she said, but it's pretty much you hit it and quit it. It's like as soon as something goes wrong, you walk away from it. So like you go out on a date, the setup is looking good. You're going on a date. You see her profile. She took a picture of what she looked like 5 years ago, and she still uses it on her dating profile today. She looks really good there. You go ahead, you go on the date, you see her. Everything still looks fine. You're a little suspect because you're like, oh, okay. I thought you looked like that person in the picture you showed me. Everything's all right. As soon as she sits down, she's like, I like to take carrots and throw them and try to lodge them in people's eardrums. That's where you stand up and you walk away. That's when you throw away your Amazon trade. Or you go on a date, everything is going well. You're like, wow, this girl is really a lot of fun and I'm having a great time. Okay, I'm also cutting the date short. See ya. You walk away. You walk away immediately from the relationship or the date. That's the best analogy I can use because it the problem with Amazon is you have to be willing, if you're holding it longer, to take a very big hit. I'll tell you a little secret of mine. For the most part today, I was tiered for 3 contracts of Amazon. Sometimes I would, go up to 6 or whatever, but my tier size for the most part today was 3 contracts. 3 on a day like today. 3. And I'm not saying I've had 3 contracts often. A lot of times it was 6. Sometimes it was 10. I don't, I might be wrong. I don't believe I had more than 10 contracts of Amazon today. And I was taking it real slow. Still was able to have a low end 5-figure day. Again, where the first digit of my P&L was not the number one. I'm not here to boast P&L. I'm not, I'm not one of those people. But just to give you an example, you could take a lot of really modest trades with Amazon and make real money. For me, there was the inauguration day and everything, and I tried to really lay low today. Now, I'm not here trying to make you feel bad about, having a hard day. I'm just trying to give you an overall mentality of trading Amazon and what it was like. All right. So in the future, when I have more information on your trades, I'll be able to delve into them better, but I hope you sort of saw the mentality of what I'm doing. Mark, you said that your losses on Amazon. All right, so this is a direct question from this video. Mark, you said that your losses on Amazon options was about 30 cents. That's not what I said. I said they're about 30 to 60 cents. For some reason, you just stuck with the lower number and said I said that, which is a very, very big differential, just so we're clear. But isn't the spread on Amazon options more than $1? Yes, that's called Charles Schwab price improvement. I don't trade Amazon or Tesla options because I don't want to be down over $100 as soon as I enter the trade, with the possibility of a quick $150 to $200 loss, even if I exited mostly immediately. Am I missing something? I can't tell you will or will not be down 100 or 200 or even more. What I can tell you is that Charles Schwab on Amazon today gives phenomenal price improvement where I'm able to take very quick losses. I very rarely get filled where the best offer or the best bid is. Usually get filled somewhere in between with market orders. So I'm not sure if that's what you're missing, but it's really helpful. You have good price improvement. Next email. Hello, Mark. Hello. Can you help me validate my thinking if possible? If 11:40 a.m. Tesla 1 minute was a chart reset trigger and 11:45 a.m. thick red volume would negate it? Question mark. Thank you. Let's take a look. Let's take a look. Let's see if we could see what you're saying here. All right, so you're saying 11 o'clock on Tesla. Hold on. Let me just double check. All right. So you're saying 11:40 a.m. on Tesla. So you're literally referring to it right over here. All right. Okay. I'm not sure why you think there's a chart reset at 11:40 here. Okay, but the stock rises up, and let's even argue that this is a chart reset, which it really isn't. I mean, when I zoom out here, this is the volume bars you're talking about right here. Is there anything special with that? No, there isn't. All right, let's play along though. I'd like to see more volume. And the 11:45 a.m. thick red volume. I think he's referring to this. Would that negate it? What it does is it creates a special scenario where it becomes suspect or sus. What happens is while a stock is going up, you rarely want to see a huge red volume bar just pull down against it over here. So your answer is yes. Also, if you've watched the latest video, you'll notice that the only time a Mark 1 is valid is when you're trading above the first 1 minute high. So there wouldn't be any setup here whatsoever. There's no strategy here whatsoever. In terms of the C strategies I use, you could call it another strategy, a bull flag, don't get me wrong. Anything can work. But it also wouldn't be a Mark 1 because you weren't trading above the first 1 minute high, and that would be an easy way to avoid something like that in the future. Okay. Hi, Mark. Hi. Second week in the room, and I'm appreciating you and the Newsbeat family so much. I use Street Smart Edge for my regular account, but have opened up a Thinkorswim account so I can paper trade. I was hoping someone might have a trading layout in Thinkorswim they could share with me. I asked the room a couple times and didn't get a response. That's sometimes common throughout the trading day. Everybody's obviously super helpful, as you know. Would you be so kind as to ask for me? Okay. Can anyone in the room email me a Thinkorswim layout or post it here? I would appreciate that. Okay. Next email. Mark, at a time long ago in a place far away, I almost feel like you're going to see like words coming up the screen like this. I was in a prop trading room with over 200 people. Most of the members were paper trading because you had to meet certain targets to qualify for real money trading. I'm sure they charged money to every single one of them. Great way to make money. Many years after the room closed, one of the moderators told me that of the members who were profitable at 10 a.m., 90% gave all their profits back at the end of the day. And that goes into one of the studies I did where the time trades where and this is old. This is back in 2019, so none of this applies today. But I think it still applies today. I literally asked 25 actively profitable traders how did they do trading in 2019. So what I did is I took 20, not 25 traders, 25 profitable traders, and I asked them how many of you were winners between 9:30 and 10 a.m. And that was always, as you can see, the highest number by far between 9:30 and 10 a.m. And I asked them for January, I asked them for February, I asked them for March, and it pretty much was very apparent to me that the majority of profitable traders are making their money between here, followed by 10 to 11. Hence why 9:30 to 11 tends to be the best time of trading for the majority of traders in my personal experience. So yes, I absolutely agree with whatever that person told you, and thanks. All right, so somebody's helping me remember Harry's quote from the other day. And he's like, hey, Mark, in case you want to quote him, he said, after yesterday's video, many might think, Mark, if we follow your new rules, we will miss pretty much most of the trades. That is the point of taking the perfect setup and not taking paper cuts and losing on a small account to zero. So the whole point is I created a new methodology, a new education system that is meant to help traders with small accounts take the highest probability trades that I know possible if they choose to take it, of course. And I literally created a free education system and a free video that's exclusive for Newsbeat Live members only that actually help acclimate them and get them to that level. So, um, just thought I would share that with you. And yeah, let's go ahead to the next email. Dear Mark, I've been trading with the Newsbeat live room every day for about 5 months now. For a little bit of context, I have about a $2,700 cash account on SSE, and I trade 1 to 2 contracts at a time. Most often, I trade names that have 50 to 250 premium at near the money with tight spreads. I size up 2 to 4 contracts if the premium is on the cheaper end, but I rarely size up because I'm scared of a larger loss as opposed to a one contract loss. I'm just telling you right now, the video that I did over the last weekend is going to address this beautifully, in my opinion, but I'm going to continue reading your email. Second, most often I trade one contract in Tesla with options that are 350 to 650 premium, sometimes more or less premium depending on the day of week and the proximity to the at the money premium. I will often trade Tesla 1 to 2 times per day. Often, if I am green on both or either of these 1 to 2 trades, I feel like I need to hold on to whatever I made and not give anything back to the market. This leads me to undertrade. Let me stop you right there. You have a $2,700 account. You have no choice but to undertrade. You can only trade up to $2,700. You cannot trade more than $2,700. That is the most you can trade. Meaning, if you buy $1,000 worth of calls, you have $1,700 left of calls for the day. So you have no choice but to undertrade. If I'm missing something, maybe I am. Undertrading is my main struggle. The most I have made in one day using the C strategies is about $27. Most of these profits were from trading Tesla. This is mostly because I don't enter enough trades. Again, I am struggling to understand how you can physically enter more trades. And or it is too scary for me to tear up on good conviction trades. Again, how much can you really tear up? All right, fine. You're taking a $600 call. I'll go on the high end. You could take 4 contracts, right? It's too scary for me to tear up on good conviction trades. I feel like I need the confidence to enter trades more often, especially on decent or high conviction setups. And again, my video, the new education video I did, is actually designed for this question. I know how your C strategies work, and I've been watching them work every trading day for about the past 5 months, ever since I started trading with Newsbeat Live. I've never done any type of trading before Newsbeat Live. However, I still hesitate to actually enter a trade when they are about to trigger because I am afraid that the trade will not go in my favor. I also hesitate on the 5 minute know your limit trades more when a trade triggers below for longs, above for shorts, the first 5 minute candle. Many times I've seen the 5 minute know your limit 21 and more often the 5 minute know your limit 55 trigger below the first 5 minute bar and work well. I know this is breaking the tip, and this is exactly why, again, not to be, because I know you wrote this email. This email was written actually a day ago. You actually did not watch my recent video. I'm convinced because there are no more tips. So, for example, if you're trying to use the new know your limits, for example, on the 5 minute, you're going to realize that it looks like this. You'll realize that there was an update right here on January 10th. So with the update right there on January 10th, you still have not watched this free educational video because you'll notice there is no longer the word tip. Now it's actually part of the rules. So this is what I actually did because I was thinking for 2021, I really had 2 goals for 2021, 2 goals. One, I want to donate $1 million or more to charity this year by December 31st. 11:59 p.m. and 59 seconds. I want to donate at least $1 million to charity this year. And my second goal is to help struggling traders who have small accounts. If you have not watched this free educational video, which was completely designed to address issues like this, You, my best friend forever, home slice, home fries, chili, cheesesteak, Bartholomew, are doing yourself a tremendous disservice. I find that it is rare for me to follow the above the first 5 minute candle tip. Don't even want to talk about the tips anymore. You're talking old strategies. Don't even want to answer it. Gonna just move on. I respect what you're saying. That's why a change was made. So I don't want to explain what you need to do on an old system when I gave you a free educational video for a new system. Another thing about the C strategies, I've noticed that I'm able to hold trades for longer when a trade triggers, then gets above the 1 minute 8 day EMA. Many times I have scalped out of trades earning a little money, and then I watch the same trade run up much more than what I made on the scalp. This uptrend occurs when the stock trends up along the 1 minute 8 day and 5 minute 8 day EMAs without going below the 1 and 5 minute 8 day EMAs. When you say 8 day EMAs, you mean just 8 EMA. It's not a day. A 1 and 5 minute chart have nothing to do with a day. So I don't think you're describing it correctly here, but I think I know what you're saying. You're just saying 80 MA. So I'll assume that. Would you say holding a strategy is to sit in a trade if it gets and stays above the 1 minute or 8 day and eight? My opinion is if a strategy works for you and you're consistently making money, I'm happy with it. It doesn't matter what you do. No, really. Like I got a few emails like people I love and respect. Look, they're like, "Mark, what do you think of the RSI, like the relative strength index? What do you think about the RSI?" And I'm like, I think it's abbreviated by 3 letters, one going in succession and then the other going back to the letter I. What do you mean? What do I think about it? Doesn't matter what you use. What do you think? What do you think it really matters what form of technical analysis you use? It doesn't, as long as you're consistently profitable. Mark, what do you think about Fibonacci's? Oh, 98% of traders are probably failing today using Fibonacci's, while 2% are successful and swear by it. Are Fibonacci's bad? No. Are they good? No. The answer is whatever is good is whatever you do best. Now, I can show you things that a lot of people do best, and I could show you what I do best using what I like, but that doesn't mean that you can't adjust and tweak to your own design. That's the whole point. You see, what I'm trying to do is I'm trying to put you in a nurturing environment. I give you the free education. I give you the free layouts to my software. I give you the free layouts to my charting. I give you more and more and updated education for free. And I put you in a psychologically positive environment. However you blossom, young flower, is up to you. I will shine the sun upon you and give you all the phytonutrients you photosynthesis is not the phytonutrients. Anyway, I'll give you all the sunlight you need to grow. How's that? That's what I'll do for you. So if you see something that I notice, like, well, what percentage of the time are you making money? You went ahead and you shared an image here of your trading. Let's see. Okay, so in a month you made, $67. It's I've seen obviously a lot worse equity curves. Yes, I understand that $67 probably does not pay your bills unless you're living in a third world country, which I would question how you have access to the internet at that point with being able to trade. I get it that you're just trying to get to the point where you can learn and then size up from there. But if you see something that works, it works. If you see something you don't like, it doesn't. What I tell traders to do is do what you do best. I understand that traders are individuals. I understand why 98% of traders fail in every single trading room ever, despite how good or not good the guru is. I encourage you to do what you do best, but not only that, I help you find what you do best. I literally hold your hand on that journey to try to get you to the point where you actually can literally find it out, calculate it, come up with an answer, and then execute upon it, right? I follow your C strategies, mainly trading the 1 minute know your limit 21 in Tesla, the 5 minute know your limit 21, and the 5 minute know your limit 55. I rarely trade the Mark 5s, even though I see them work all the time. Today was not a great day for Mark 5s, ironically, right? But I know this is a day old, but I'm going on. Oftentimes I'll enter the Mark 1 or 1 minute 8, 21, 55 know your limit trades when you mention them in the VTF. especially when you're concentrating on names that are on the 9 charts you give. I have, however, find that I am best at the 1 minute Know Your Limit 21 in Tesla, the 5 minute Know Your Limit 55, and the 5 minute Know Your Limit 21. When I see 5 minute 55s and 21 Know Your Limit strategies trigger on one of those 9 charts that you mentioned, at the beginning of the day, I will sometimes enter, but most of the time I paper trade the Know Your Limit strategies. Seeing these Know Your Limit strategies works makes me wish I actually pulled the trigger, so I feel regret for not entering them. However, I also feel that I'm gaining confidence that I could pull the trigger on more trades, so that's what you're trying to do. You're building your confidence from the ground up. Don't sit there and look at the skyscrapers around you in the room and say, oh man, I wish I was on the 100th floor of this building. It's not going to do you much good. The thing is that I often hold trades for longer while I paper trade, which leads me to make way more profit than the trades I actually enter and scalp out of. It is just harder for me to hold when I'm in a trade because I get too scared that I'm going to lose money once I am making money. So this fear is overcome through consistency. That's why most traders fear is they're just inconsistent at the moment. Once you actually achieve true consistency, the fear disappears. I know, a lot of the Wall Street adages will tell you, overcome it, set it and forget it. That's a very famous one where you set a profit level no matter what and a stop loss level no matter what, and you enter the trade and you sit back and you do one of these and it's going to work well. You're going to get paid or you're going to get, punched in the nose, right? Um, yeah, you have to earn your confidence. It is not bestowed. See, that's one of the fallacies of confidence. A lot of gurus try to instill confidence in you by showing you who they are. It would almost be like LeBron James saying, look what I'm doing. He jumps in the air and he spins like a tornado and then he dunks the basketball. Then he says, look, you can do it too. And then everyone's like, yeah, I can. And then you jump in the air and you can't even touch the rim, let alone spin like a tornado, right? Same thing is with the traders who boast P&Ls. That's why I do not share a P&L. I know a lot of you listening or watching right now might say, wow, that is amazing. This Melnick guy knows what he's talking about. But all I am going to do is instill a false sense of confidence. That is why it is important for gurus not to sit there and show you their trades because it ends up destroying you, especially if you are not achieving those results. That is why I don't share the trades. Do you understand? Yes, I can show you lovely P&Ls. I could show you consistent P&Ls. I could show you these things, but it doesn't help you. So yes, confidence needs to be earned from you, not from me. I can't give you confidence. I could give you the sunlight. I could give you the free education. I could give you the free software layouts. I could give you the free charting layouts. I could sit here and go through your entire email and tell you what I think about it and spend countless hours every single week with you guys. But I'm not going to just flash you my panties and ask you, are you ready to party? Okay? All right. Um, I'm also unsure if I should take more trades. Again, I'm having such a hard time trying to understand how you can take more trades. Um, but I'll entertain it. Hold trades for longer, or should I tear up on trades that are higher conviction, thereby taking less trades? For me personally, I can't tell you what to do. I would say I would tear up higher on higher conviction trades. And I'm going to use a very harsh example. Today, what was the first trade I really liked? Amazon on the 1 minute here. And how does it work? All right, guys. How many of you guys like Amazon? Yes, no, yeah, right? And all of a sudden it's like, yes, 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 yes. Most of the people were saying yes. It digested on 2 candles and then it just ripped. So maybe in a situation like this, your account would have been able to afford one option contract, just one, and that would have been, unfortunately for you, your one trade of the day. Considering you bought like one out of the money option. I forgot exactly where it was, but $2,700 account. I'm assuming you could have had one of them on a Wednesday like today. And I can't tell you you would have made or lost money, but I front ran it. The stock opened up at 13.99.05. Most of the traders in this room probably front ran it before 3,200. Excuse me, yeah, before $3,200. So they were buying before it triggered here. This stock jumped almost 14 points in your face. Now, I'm not saying you caught 14 points in your face. I don't think catching 3 or 4 of those points was difficult. And that would have been good enough for your options to move $1.50 or two. Just general, making it like I don't remember the exact movement or where it was on the time or where the bid and offer was. And then you would have had again, making it up. If you executed in this one scenario, you would have been like, okay, now I'm up $100, 150, $200, and you did one trade, and you go back to your demo account, you feel invigorated, you feel excited, you have your conviction trade instead of doing all this other stuff. Problem is you don't have enough money to do everything. That's the problem I see, because if you could do everything, it would just simply be no problem. Would you say that I can't tell you that you should use all your, I can't tell you legally to take a trade, so I can't tell you if you should use all your buying power every day. For me personally, for myself personally, my answer would be yes. I would try to use all my buying power every day. Um, let's go ahead and ask the Newsbeat Live members. And again, all the buying power is one thing. Let's go ahead and run a poll. Should someone, should, I won't even say someone, would you personally, can't say it for everyone, use your entire buying power to grow as a trader if you had a $2,700 account? Again, this is not advice. We're going to go ahead and add a couple choices and we're going to let the room answer. For me personally, for me personally, my answer would personally be yes. My answer would personally be yes. So here's the Newsbeat live room. We're asking them literally right now, would you personally, can't say it, and I put the quotes on personally wrong, can't say it for everyone, just in your personal situation, it's an opinion. Would you use your entire buying power like daily? Or I'm not saying you have to get exactly to 2,700. I don't care if you use 2,450, but would you pretty much use the majority to all of your buying power if you had a $2,700 account? And that's the question. So you could already see, you know, most of the Newsbeat live members voting right now, do feel that way. That that they would. Thank you so much, and I'm gonna just go ahead and I guess you guys can see the results on your screen right now because I'm literally sharing them. But yeah, that would be most people. Most people would feel that way. Again, that doesn't mean you should. Just means most people agree with that statement. I couldn't vote there, but I would be one of them. Would I say it depends on the trade? Of course it does. Would I say I should use up? Me personally, I would do it. Another thing to mention, I've always been consistent with selling on the low of the prior candle, or even a little before the low of the prior candle when the stock goes against me. That's terrible. That is awful. That is absolutely awful. So if you actually read the new C strategies, which I'm encouraging you, read step 5 over here. Set a stop at the low of the same prior 1-minute candle you used to determine your buy. Please note, period. Please note, I almost always exit before this happens. So to give you sort of an idea, and this is really, for me, I've never seen a better risk reward model in my entire life. In my opinion, it literally crushes the take profit here, stop loss here, especially for scalpers and things. And I'm going to show you exactly how it works here. But before I do, I just literally want to talk about the risk reward model, you know, that Melnick uses. I can't talk about yourself personally, of course. All right. It obviously works for me, but I'm going to ask you guys a poll again, and you can answer it, but I just want to show people that it's literally a chronological thing. Whoops. I'm going to just remove it and just add it in again. It's literally a chronological thing. What I'm asking is, and I'm going to show you the model right now. I'm actually asking you the risk reward model that Melnick uses. Do you think it's the best model or do you think, it's all right? Just to give you a feeling, there is no right answer. I mean, everybody has their own opinions, but that's what it is for me, and that's what works for me, and doesn't mean it will not work for you, right? So I'm going to show you the model. I'm going to show you the model here real quick, and I'm going to share with you what it is. But pretty much, let's say you're doing a Mark One, right? And the stock goes up here, and if you don't know what the strategy is, we teach it for free in the room. But let's say the stock's going down, typical bull flag, as most of you would know it, and then all of a sudden the stock is trying to potentially go up here. Yes, I'm making it up like it is working. And right here's the trigger. Usually, let's say the buy is my purple bar here, right? The buy is my purple bar here. My stop loss will usually be right over here, maybe right over here. My take profit level will usually be either right over here, right over here, right over here, right over here, depending on if the stock just wants to keep ripping, right over here. So just to give you guys sort of a mentality of this risk structure, and again, there's no right or wrong answer. It's just freely admitting what I do. Here is pretty much from the top of that purple line to the bottom of the red is pretty much what I will lose. Even though the strategy says the worst case scenario is here, this almost never happens to me. I can't remember the last time I got stopped out at the bottom of a candlestick. How's that? So the distance between here, God, this is a pencil. The distance between here is my risk. My reward is like this, or like this, or like this, or like this, or like this. I don't know what my reward's going to be. I don't know exactly to the penny where my stop will be. And this is also another stop right there. So what you could really see is the purple's the entry point, the red is where I'm stopping, the green is where I'm making money. I just never know how high it's going to go. I'm comfortable admitting that I don't know how much a stock is going to go in my favor over here. So for example, going back to the Amazon play, you think I had any idea that in 60 seconds, if Amazon broke that level, that it was going to pop 12 points in my favor? You think I really knew that? And this is a 1 minute bar, just so we're clear here. It's a 1 minute candle. You think I really knew that? Of course I didn't. But I did have a good idea of what I was going to lose if I was wrong. I wasn't really 100% sure what I would make if I was right, but I was very sure that I had a great probability of knowing what I would lose. Let's put it that way. Oops, wrong one. So when you're saying that I've never held a trade below the prior candle stop, you were never really supposed to, but read the new updates. I feel that my strength is that I'm disciplined at selling out when I need to. That is so critical towards success. This is, if what you're saying is true, this is amazing. I'm not saying you're lying to me. I'm saying true. Like if you're really disciplined at selling out at the right point. The problem for me is that I often cannot hold trades long enough to make enough money. Um, okay. Or I get too nervous to take trades in names such as Tesla and Amazon often enough. Now, I know I've been doing a lot of Tesla and Amazon. I know there are other rooms that like to trade, smaller names and whatnot. And look, like, and I'm not saying that I don't bring up smaller names, but for example, if you trade a $10 stock that does, 3 million shares, and you times it by like 3 million, you get, you know, $30 million, $30 million worth of buys and sells, and it almost feels like, you're sort of being dragged along on those names. They're not really naturally flowing or moving. But if you take, for example, let's even call it a $3,250 Amazon, it's at 32.63. If you take a 32.50 Amazon and you multiply it times the 5.3 million volume you have, and I'm going to tell you why this is important. Let's just even call it 5 million volume. I'm downplaying it here. If you multiply it by the 5 million volume, what happens is you end up getting a number that is absolutely massive. $16.25 billion. And again, I know it's higher than that. I rounded quite down both times. So instead of doing $30 million of stuff traded throughout the day, my main focus will be on something that does $16.25 billion. And I understand that, it feels like, and I know you're saying like this is, um, you know, the situation you're in. But like you have to understand that 98% of people fail in these services, and from my experience, people who do focus on these names get the results. And I know you have a small account, and I know you're making money overall. Like I could clearly see your progress. And no, it's not where you want to be. Don't get me wrong. Like I get it. Like you're making money, but you're definitely you're definitely not where you want to be, and it almost feels like a struggle up the stairs here. I feel you, like I'm with you. You're ready for this? You ready for this? I could describe what I try to do is the opposite of what Wall Street does. People who run trading services, in my experience, all fall within two places. One, 90% or more of their focus is on names where if you multiply the value of the stock times the number of shares, you're going to get numbers way under $1 billion. Like they'll do a $10 name that had 5 million shares, or they'll do a $20 name that has 300,000 shares, and it gets to the point where it's just, you know, it's a focus on these smaller names, and people with small accounts think like that's where they have to go. But the problem is most of those people need to do common stock, and if you're under PDT, you could only do 3 trades a day in a margin account, or 3 stock trades a week, excuse me. You are really going to have a slow learning curve. It's going to take you a while. You at least could do an option trade up to your thing every day, considering that's what you want to do, right? And the other room are people who do focus on the big names, but they have 10 positions, 20 positions, 30 positions, and somebody with a small account is sitting there like doesn't know what to do. More traders struggle than do well in the industry. Why do you think we're T3 Live's number one trading room in terms of size? We're T3 Live's number one trading room in terms of consistency of our traders. Why do you think we got here? Because my strategy of actually trading these large names are actually more conducive for the smaller traders, in my humble opinion, just from what I could see. Maybe I'm wrong. I'm not making a statement, but what do you think? Why do you think that works like that? Am I trying to give you the confidence to trade Tesla or Amazon? Of course not. What I'm trying to do is actually have you just analyze the things you're doing and react accordingly. Usually, if I have one green trade in Tesla, I don't want to try it again because I'm afraid of losing the money I made. There's nothing wrong with that. In my opinion, you want to lock in money, you have a small account you're trying to build. And by the way, you are building from what I can see from what you showed me. You are building, you're just not there yet in terms of being where you can say, all right, this is what I could do for the rest of my life or have any form of confidence towards that goal. I get that. The most I made on one Tesla trade is $23. The most I've lost on a Tesla trade is $54. I think I'm fearful of losing that $54 again. So I trade Tesla sparingly. I've gotten better at taking more Tesla. So you literally have, all right, never mind. I'll go on. I've gotten better at taking more Tesla trades recently. However, especially when the prior bar has a small range because I have gotten a little more comfortable with the way Tesla moves. When I've entered trades in smaller names such as Snapchat and Facebook, I often sell very quickly if it spikes up, marketing in and out quickly while sometimes glancing at my P&L. I usually keep my eyes on the chart. That's a mistake. And sometimes at the level 2. That's where, in my opinion, it should always be. The problem is that, so right away, I am noticing that, again, I can't tell you what to do. It's a mistake in my eyes. You have to be the ultimate judge. I never keep my eyes on the chart while in a trade. I'm looking at the chart. I want to see where the level is. As soon as I come up with that number, I'm immediately looking at the right side of my level 2. I could guarantee you that you are probably not watching all the videos that I watch because already you haven't watched the latest video and you started asking questions with old C strategies and you probably missed the video of where I keep my eyes on a trade. I'm not putting you down. I'm just saying seek these things out. Seek and ye shall find. And this is why this is such an important email. Um, I really hope that you're literally going to be watching this email right now because it's a great email and you're going to be helping a lot of people. But back to it. The problem is that when I sell quickly, I often break even, make very small profit, or have a very small loss. Yes, when you trade Facebook or Snap and you sell very quickly, yes, Amazon can jump up 10 points in your face. And if Amazon starts heading down, usually you could take a quick loss before it drops in your face. The problem is that when I sell quickly, I often break even, make very small profit, or have a small loss. Granted, I sometimes enter in a little late without front running, but when that happens, it's usually less than 1 second after the trigger price. Recently, however, I've gotten better at front running, and I usually have pretty tight front runs away from the trigger unless it's a more spread name with more volume, such as Tesla. Then I'll front run. See, you shouldn't see front running is based on velocity, not just saying 15 to 25 cents from the trigger. You know how many times I front ran Tesla like $1 from the trigger because it's shooting up towards the level, and I'll just literally enter in like $1 before the trigger. It'll shoot up, it'll trigger, it'll shoot up higher, and then all of a sudden, if you have, you don't have to have 50 contracts per se, but let's even say you have like 10 contracts, those contracts could be worth, I don't know, 10 contracts on a move like that where you front run by $1, it hits up, it triggers, like a really nice trade, could be worth like $6-7 times 1,000. So you make like 6-7 grand on 10 contracts. One contract, 600-700 bucks. Very optimistic scenario. Not doesn't always happen like that. But I'm just trying to paint a picture of you're given an exact number. Like I try to front run about 15 to 25 cents away. You're discounting the velocity. You see, the funniest thing about trading is people say trading is all mathematical. The hilarity of it all is that there's so many other factors. The velocity of how your stock is moving towards levels is an important factor, and chronologically, the time you're holding a trade is important. If you say I'm buying something at $10, my take profit target's 11, and my stop is $9.90. I'm risking 10 cents to make a dollar, 10 to 1 risk reward in my favor. They don't mention what if you're sitting in that trade for 3 hours? They'll say, well, it doesn't matter. You didn't get stopped out and your take profit target didn't get hit, right? Well, you're going to be sitting there focusing and looking at your P&L go up and down all day. Goes up to 10.30. Ooh, should I sell here? I'm up 30 cents. Nah, I'm going to watch it drop down to 10. Ooh, it's at 9.95. I'm near getting stopped out. Should I just sell it here? Should I take the stop? I don't know. All right, it's back up to $10.10, and you're sitting there poisoning yourself watching it move throughout the entire day. Can any of you guys relate with that? Like trading, the time spent in a trade is a huge psychological factor. It is harder to hold a trade longer than it is to hold a trade shorter. Are you wondering why so many people are successful here? We're showing them ways to make trading a living, a job. Now, I'm not saying there aren't people who are not swinging trades for a while, and I'm not saying that I don't even have an overnight trade on right now. I do, but just painting the picture from a scalp perspective based on your email. Recently, I've also been sitting in slower moving names such as Facebook and Guild a little longer in order to gain a decent profit with one or two contracts, but I've not made nearly as much money in small names as I have with Tesla. Exactly. Exactly. Usually because I sell small names too early when they start to pull back. Right. You're not comfortable holding names. That's not a weakness. You think that's a weakness? Whoops. That's not a weakness. That's not a weakness that you sell too early. People are like, I hold my yes, it's a weakness if you're selling your winners too early and holding your losers long, but I have never seen the majority of traders able to you either hold your losers for a long time and hold your winners for a long time, or you sell your losers quickly and you sell your winners quickly. When you try to say let your winners ride and cut your losers short, good one. Good one, Wall Street. The only times that I've traded two contracts at a time have been in companies such as Facebook and Apple on a later day of the week when at the money or one strike out of the money option prices are cheaper. I often feel that trading one contract is not yielding as much profit unless it's a name like Tesla or Amazon. Ta-da! Do you think that I should continue practicing know your limit Mark 1 and Mark 5 strategies with one contract and names with relatively cheap premium and tight spreads? I can't legally tell you what to trade, but you should paper trade all of them. Also, should I continue to trade expensive Tesla or Amazon options with this account? I can't legally tell you any stock you should trade, but I would personally look to trade Tesla or Amazon if I was in that situation. So Josh is saying something here. Josh is saying typically you're only afraid of selling too early and missing big moves when you're not consistently profitable. I agree with that statement. He's saying typically you're only afraid of selling too early and missing big moves when you're not consistently profitable. And that's true. And I'll actually tell you why that's true. I'll tell you why I agree with that. Because the problem is traders who are not consistently profitable, yet they're probably down money and they probably remember the big losses they've taken and they feel that if they're taking big losses, they have to take big gains in order to make up for those big losses. When in actuality, in my experience, I can't tell you what's right or wrong. I've been, running trading services and I'm going on my 14th year. I will tell you right now, in my experience from running a service like this, I will tell you right now that people who who think with that mentality because that big losses before, they need to have big gains now to sort of balance it out. People who think like that, the best solution for them tends to be cut your losers short. Doesn't matter what your winners do. That's how I feel personally. And some of you watching might say, that sounds crazy. That sounds nuts. How do I go ahead and do something like that? So, how do I go ahead and, do something like that? But here's the thing. Here's the thing. Um, You're not going to make probably a lot of money on Apple and Amazon, in my experience, unless you're able to sit there and hold for a much larger move. In terms of someone like you who is interested in scalping, and you're going to want, in my opinion, the biggest bang for your buck. I can't tell you what to trade, but they tend to be the thicker names like Tesla and Amazon. Okay. Well, that's going to, hold on, I'm just going to read one more email because it just came in 24 minutes ago. Hope that answer to your email helped you. You'll notice that I spend a lot more time with people struggling. Mark, yes, Amazon and Tesla have been great. This email is all about stock selection. Now, I always make sure to trade names with options that are very tight relative to the amount of movement possible, just so you know. Ding! Here's the deal. Names like NVIDIA come up. This name was listed as a good name by you in the Saturday coffee time. It looks tight to me. NVIDIA tends to give bad fills. I front run on a good setup. It triggers and then ticks down a little right after that. I exit immediately. I take a small loss or break even. I was caught off guard because this never happens in names like Amazon and Tesla. Yes, for whatever reason, NVIDIA's personality does not give great price improvement like Amazon or Tesla. We could sit around and butt heads all day and try to figure out why. Or you cannot give an F and just say Amazon and Tesla are easier to trade and I'm going to focus there. That's my take on it. In the end, I just need to figure out how to come up with a list of solid names. Exactly. Do I have to monitor my own fills, or do you have a good list of guidance? I like Amazon and Tesla. You'll realize Amazon and Tesla right now are on my list every single day. Now, that doesn't mean like so for today I gave these names. DraftKings isn't horrible. It's not great, but it's not horrible. Baba's decent. Baidu is shaky, GM is shaky, Roku is shaky. Tesla and Amazon are great, and they continue to be great, and they make my list practically every day. What's crazy is that I've been keeping stats on every little detail to group each strategy pre and post 11 a.m. I thought I knew which strategies were best, and I thought that after 11 a.m. was no good. Now I'm being hit by the fact that in reality, certain names I make money on all C strategies even post 11 a.m., and other names I seem to be losing on all C strategies pre and post 11 a.m. Now I'm questioning everything and wondering if all my statistics may be invalid. No, you're finally barking up the right tree. You're finally understanding. You're finally asking the question, Mark, why is Tesla and Amazon literally every single day for the past I don't know how long, the first two names in your list always? Why? Because those are the money shots. Those are the money shots. Now I'm questioning everything and wondering, here is where you step in and rescue me from myself and clear things up. Now all I need is your 2 cents. Welcome. Welcome. Now, yeah, at some points today I tiered in 5 contracts of Amazon, and sometimes I'd go for 5 to 10 or 3 to 6. For most of the day, my initial tier size before I opened up, whether it was once or twice or more, was 3 contracts in Amazon. 3. If I showed you my P&L doing mostly that today, your jaw would drop and break on the floor. If I showed you how much money I was up today doing that. It is, and I was just saying, all right, it's the inauguration day, something crazy might happen, so I'm going to chill out. Even though I was pretty excited this morning, would you guys agree like I had a little zest in my step this morning? Because all of a sudden names were gapping up. We had upgrades. I was excited about that sort of in a way. I think I had a little more zest in my step, but overall I think I was just uh you know I think I was just more excited about the gap up and everything. And overall, yeah, like we're trading the biggest names on the planet, like Tesla and Amazon. And it's not only that they're the biggest names, because Apple is different. See, Apple was amazing to trade. Apple was amazing to trade before it split. So this is so not only that, like I want to show you something. Like even if you look at Nvidia, it obviously had a big day today. For example, let's say you get a Mark 1 here. You look at the screen bar, you're like, nice, right? No, this green bar is effing disgusting. It literally went 55 cents through. This is a 55-cent move from the top of this bar here. Granted, you front run a little, maybe it's a dollar spread and you make a little money. This is a 55-cent move on the 1 minute. All right, you do a know your limit 8 here. This is a 50-cent move in Nvidia. That's the effing problem. And the bad fills. I'm with you there. By bad fills, I mean poor price improvement. Not bad fills, but poor price improvement. This is a 50-cent move. Now let me take you to Amazon. All right, let's see what oh, okay. From the high here to here, it's a $12 move. All right, from here to here, even on a bar that blips up, it moved up $5, $4.92. $5. It blips up. Okay. Let's take Tesla. Now, Tesla, I wasn't trading a lot today. There wasn't a lot to do with Tesla. But just looking at some of the breakout bars in Tesla, some of them move 3, 4 points. You see the difference? That's why Nvidia sucks. You want to talk about Apple? Oh, it's very tight options. Well, look, sucks for hyper scalping. Good if you're sitting there swinging. Don't get me wrong. A lot of us are still trading Apple every day. I trade Apple sometimes. Look, but this bar right here, nice breakout bar, right? Even if you held for 2 minutes, nice breakout bar. Went from 17 cents to 68 cents. I mean, this is a 51-cent move. This is a 50-cent move from breaking out here to the top on the second candle. 50 cents. You'll make money in that. But how much? Compare that to an Amazon where even this crappy 21, this little green bar right here, how much do you think this is? Real quick. If this was Nvidia here, it would be 50 cents. On Amazon here, it's $4 from the high, not even from the front run level, from the high of this candle to the high of this candle. $4 move. On a $4 move, you can usually catch a dollar or so in your options, maybe a little more, depending on how fast it moves. And if you're using algorithmic strategies, which try to predict algorithmic volume effectively, and you get a little elevation in volume, your implied volatility will go up and you'll make maybe even a little more money. Do you guys understand why Amazon and Tesla are so important to hyper scalping in the current environment? Do you guys understand that right now in the room? Do you guys get that? Why it's so important? All right. Well, I hope you absorb that well. So, from the bottom of my heart, I hope you guys enjoyed this show. Links in the description if you're interested in anything we do, as well as a free ebook if you want my free psychology book. Also located in the description of this video. Happy trading, make money. We'll see you guys tomorrow morning on the Newsbeat live trading broadcast.